Guillaume, thanks very much for joining us. From your perspective, what are you seeing as, I suppose, some of the key kind of talking points at the moment for the industry?
Well, I really believe that, as of now, the two main question marks that are still unanswered in all the models we're trying to run for real estate acquisition are, one, the financing, whether we can find mostly senior lenders to join us on interesting deals. And, well, the banks are here obviously for good location and for core-ish assets, but for the rest, it's really hard to get a view and on what they can do unless you're really acquiring the asset. This is the first thing. And the second, obviously, is to really understand, I would say, more in location where the vacancy is, I would say, a little bit above the normal, where the rents are going to be. Because as of now, a lot of tenants are trying to understand where their real estate strategy is going, obviously with, taking into the consideration the appreciation of remote working, of flex space. So it's really hard to see where I would say the assumption and the underwritings are going in the model we're trying to run, especially on those two sides. So basically it means potentially asking for, I would say, a high discount to the sellers. And bearing in mind also that you would need to provide obviously more equity and more buffer to your deal. So still hard to navigate in those opacious waters, I would say.
And how are you seeing this? I mean, you're obviously there based in Paris, Guillaume. So how are you seeing these kind of things play out in the French market?
It's taking into account in the first place the Greater Paris. There's obviously Paris and Paris CBD, which is doing fine, where capital is still there. Obviously, banks are still happy to finance, mostly core, but also happy to take a little risk, notably in relation to the low vacancy and still to the potential tenants happy to get some space within that area. And I would say you have the rest. So basically, suburban Paris, which is facing less appetite from capital, less appetite from bank, and obviously less appetite from tenant. So I would say it's kind of a dual market where it's hard to navigate. So I would say if you're looking for core, well, you have to jump into the competition and to pay the highest price to get a beautiful building. And if you want to secure I would say a more attractive yield, and obviously taking a riskier situation within suburban Paris. Obviously, there's multiple assets, but the first thing is sellers are not ready yet to activate a huge discount to you. And also second, it's always hard to find, I would say, the proper equation to solve your acquisition model. For the rest of France, I would say that the top 4 or 5 cities behind Paris are still pretty good at holding on, as the vacancy has been very low. But once again, there's been a lot of endogenous movement from, I would say, main national French companies and mostly, public or parapublic entities. So I would imagine that the flow of take-up for the next, I would say, 2-3 years will be not so huge as we've been seeing. So I would be more conservative and more careful for those jurisdictions.
Thanks for joining us from Paris, Guillaume. Thank you.
Thank you very much.